All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and I'm happy to be here. Hopefully you are too. Happy Friday to you. We've only got one of them, so we're not going to screw it up, right? There's only 52 a year. We can't ruin it. Let's talk about these markets, though, and see what we've got going. This is the second half of the day now, so that's the good news. The bad news is you got me. Who knows? All right, let's take a look. Corn. I'll bring up corn board up. You remember the WASDE, we had less corn than we thought we did, but we're coming off of those highs now. March 441.5 last there, just to tick off the low of the day. But we've had a tight range of almost just 3 cents. May's down 2.5 cents to 448.5. So lackluster probably isn't even a strong enough word for that market, but that's what I'm going to go with. Here we go. We're 8.5 to 9.25 cents lower when it comes to beans. Jan's the one down 8.5. 9.87 last, just depending off the low of the day, and about 7.5 cents off the high. March is down 9.25 cents to 9.94. 3 ticks off the low. 8.5 cents off the high. How about that? That's beans for you. Anywhere between 8.5 to 9.25 cents lower. Oh, 9.5 cents lower now. Let's go to the Chicago wheat. Chicago wheat, 6.25 cents lower on that March contract. This is no bueno, folks. 5.52 is last there, or 3 ticks off of the low of the day. About 9 cents off the highs. Maize is down 6.25 cents to 5.62. Hard red in Kansas City. Let's move out and see what Kansas City's got for us. That's a nickel loss up front. March is down to 5.57 3/4. A tick off the low of the day, ouch, and we've had an 8-cent range. May is down 4.75 cents to 5.65 All right, that's hard red. See if we've got anything going on in the spring wheat. 2 cents lower there, $6.50. That's the low of the day. When that's a 5-cent range, we're right on the low of it. A penny and a half lower in the May at a 6.08 and that too is on the low of the day. That's spring wheat, Minneapolis. Let's go to the cotton. We'll get to our guest analyst. 71 points lower in March cotton, 69.38 last, 18 points off the low of the day there. Maybe our next guest can put a smile on our face and turn this frown upside down. Let's bring him in. It's going to be Mr. Joe Lardy. He's with CHS up in Inver Grove Heights. Joe, I did the radio show this morning, and I got busy writing my show here, so I haven't really had a chance to peek at it too much. But since my radio show and these prices, the bottom fell out.
Yeah, exactly. Well, I guess we should expect ugly price action on Friday the 13th, right?
Oh, yeah.
Not good. But, this is just a continuation of what we saw from earlier in the week when we had a WASDE report that in theory should have been incredibly bullish. I mean, a complete surprise to the market, a huge reduction in ending stocks, and really that could have been the catalyst to push this market higher. But I think number one, the market ran out of steam, and number two, the farmer looked at that as an opportunity and was really aggressive this week.
I got to think that really emboldens that 200-day moving average. I mean, we couldn't get through it with that kind of action coming from the USDA. I mean, that means that thing's in concrete, if you ask me.
Yeah, to have a momentum failure, a technical failure, and just that kind of overall sentiment where you had good news and thinner volume as we come near the end of the year and you couldn't get it done. Not a positive sign for the market, unfortunately.
4th and 1, and you lost 2 yards.
Yep.
So, I mean, here we are. Are we going to wish our lives away again? I mean, I know we're going to have to keep an eye on what's going on with the weather down south, South America weather, but are we now waiting for the WASDE in January again? Is that what's going on?
Yeah, for sure. There's just not going to be that big input until we get to the middle part of January and we get the WASDE report. But, things feel like they've changed a little. Still, in my mind, we've tightened up that corn balance sheet. And if we get a curveball in January from the USDA, I mean, a 1.7 is okay, comfortable maybe. But what if they take away another couple 100 million bushels and we're at a 1.5 billion bushel carryout? That's a different ball game than we've been in before. So, you couple a potential reduction in the January WASDE with a weather problem in South America, there is some kindling for a bullish fire here. But, the dominoes need to fall in the right direction for that to happen, of course.
Real quick before you go, I mean, we've had a few pundits on, and it's hard to argue with them, but they're missing out one half of the equation. $4.50 corn, $10 beans over the last 10, 15 years. That's not too bad. But the problem is the inputs are pretty high.
Yeah, yep. It's the whole profitability, right? If your inputs are high and prices are at historically okay levels, you're still on the losing end of the stick, and that's going to be the real challenge this year. Is those input prices have been pretty high, and now we're in kind of that lower price environment. So tough choices for producers this spring.
We're going to talk about that on the Cow Guy Close tonight at 1
All right.
Central, 2 Eastern. That's going to be the C block of our 3 blocks, so tune in. We'll see what we come up with. But appreciate you putting your 2 cents in. Maybe I'll go back and rewrite that monologue to give us your point of view. But anyway, Joe, thank you very much. I like Joe. I'm like Pavlov's dogs. Every time I see Joe Lardy, I know it's Friday and it makes me happy. So there you go. Have a great weekend, Joe. Joe Lardy coming to us from Invergrove Heights. He's with CHS up there. We're going to go away. We're going to pay some bills. We're going to come back and we're going to talk livestock with a guy in a livestock jacket. How about that? We'll be right back.